we talked about gold going up and closing in this fair value gap in here. Let me take this off for a moment. We have this low, and it came off the low and closed higher. So buy-side delivery has happened from this low to that close. So price has passed through twice in this price range, from the close of this candle to the low. Price has traded down initially and then came back. So price has bounced out in that little area, and then it traded through it again here. So we define that area with a horizontal line, okay, and by having that, we now start looking at where price rebounds after it left this area. It traded aggressively lower. Then it went slightly higher here, and it was rebalancing. So we have two areas at which we frame the market for gold. So we have a fair value gap in here. Now, is it this entire range here? So we have this candle's low, where the wick has shown both passes on price. We've seen price trade lower, sell side delivery was offered, and then it came back and closed higher. So in that range here, price is rebalanced. There's no gap there. Then price leaves that area aggressively here. So we have all of this as a fair value gap or liquidity void. Price has only been delivered on the sell side here, and then we have a rebalancing over here to this high. All this range from this low to this candle's high, price has only been delivered on the sell side, correct? That was a loaded question. It's not. Look again. What's over here? That's the range it left, correct? I mean, yes, we left this little area over here, but we left this consolidation here. All this range, it left it here. So you have to take this level and refine it to here. So now you only have a fair value gap of this. See that? Price has been delivered on the sell side here and here, but it's only really exposed here, because look what happened. Price came down to this level here, and then it moved up. So yeah, there's a little gap in here from this low to this level here, but it's already been here, and it's been bought at that level before. That's why we saw price go higher. So we left that buying opportunity here behind by going lower. So to rebalance price has to get back up to just to this low here. But also what indicates it in high probable terms is the gap that is associated with just price being delivered on the downside right there. Okay? So it's not just, well, we have to look at support and resistance ideas. I mean, classic support and resistance guys would do this. Okay, we have a low here. Price trades through that low. Okay, so that support now should be resistance. But it never comes back down to it. It comes down to another low over here. So we have support broken. So that should come back as a resistance. It almost gets to it here, but why didn't it happen to be resistance here? Because support and resistance by itself doesn't work. What you're looking for is price has been rejected here. They've collapsed the market below this old low. This was old buying at that low. So when we see price trade through that, okay, and we create a gap where price is only traded down, see, there's been no retest. It didn't retrade back up to that level to retest it and go lower. It kept it open. So when I first opened the chart up, this is what you saw. I had this little range in here, this little price gap. Hold on, let me put the chart back together again like it was. Okay, so now you can see this is how the chart looked when I first opened it up and why I made that range like that. Okay, it's not a supply and demand zone. It's not a resistance idea. It's the fact that this fair value gap has been offered only on the sell side here. Okay, so it's not a zone we're looking for. We're looking for, a specific price level. That's why supply and demand is inferior. The actual level I'm looking for is this low here. If I can get this thing to pop up. I'm looking for 1240 to 1241. Okay, so basically 1240. So gold can go to most likely 1240. If you remember my conversations about gold a few weeks ago, right before this correction in here down to the order block, we thought that gold was going to go up to 1240, maybe 1250. The refined level is what you're seeing here, 1240. Now, I know some of you are probably thinking, because I saw it real quick as it shot by on the questions area, why not go back here to this low back here? Well, I've already outlined that. It's not supply and demand. It's not support and resistance. It's the orders. Where is price efficiently needing to be delivered? Because the market is going to move. Now think about it like this. Gold is higher or lower from the December time frame. It's higher. It's not marginally higher. It's significantly higher. It's 100 points higher than it was in December. It didn't move there by accident. Someone with deeper pockets than us has bought it. Now, the likelihood of the neophyte retail-minded traders, them buying it down at the 1130 level or so, probably unlikely. So we know that this big move or displacement on a daily time frame has been caused by deeper pockets, or as we deem it, smart money. So deep money has long positions right now. They have a heavy net long book. Yes, they've just today taken out these equal highs. Is that enough to be profitable? Absolutely. Absolutely. Scaling out their positions right there makes perfect sense. We're actually seeing it happen here. There's a little bit of give back here. They made a higher high. It's a little bit of profit taking in there. But do I personally believe that that's going to be the end of it? No, because there's logical reasons to deliver price up here on the buy side, because price is only been delivered on the sell side here. Below that low, there's been no return back up into the shaded area here to deliver price perfectly and efficiently. So 1240 needs to print to be a rebalanced market for gold. It makes sense to go there by itself with just this. But now couple this with the idea that gold's been bought down here at 1130. So if it's moved 100 points, it's logical for them to want to unload more of those long positions at 1240, where they know that there's going to be efficiency offered, and by offering the buy side of liquidity, in other words, price will make a green candle or pass up into this area to the top part to 1240. They will have efficiently balanced out the price for gold, closed in this gap here, and provide the opportunity for the marketplace to do what? Give them an exit point to sell their 1130s. I'm not sure what you mean by that, Lancelot. That old low was once a void in price. Don't know what that means. I'm not sure if you're making an observation or if you're trying to draw my attention to something. Does IPTA have a look back for closing in the gap? Yes. When you're using IPTA data ranges, you're using not just the stop levels or old highs and old lows. You're actually using all of the PD arrays. But I gave you just the highs and lows as a beginning point because I've had you look at all of them. It'd be too much at one time. All right, so that's all I had to say about gold and why I had that little shaded area in there. If we see, well, I guess I should probably have gold and silver in our chart index, huh? Should I start adding that too, daily? Okay, we'll have that also. And I'll have the notations of what I just jabbered on about for gold, why this level's important. I'll put some kind of commentary box down here for those individuals that weren't here, because I didn't record this section. I just wanted to show this little area, make a quick observation of why I believe gold's going to 1240. I've talked about that level for a while now, so I think it was about 3 weeks ago I mentioned that 1240, 1250 is likely. I just don't know exactly what video, so that's up to you guys to hold me accountable in terms of that. So when I say something, write it down, make a time date stamp, remember it, or just ask Blind Frog or Thor. They'll probably tell you. They'll probably tell you what underwear color I was wearing that day. All right, so I'm going to close it here, folks. Have yourself a pleasant afternoon. I'm going to escape and just get yourself prepared for this weekend. So we're going to be going into really refined ideas about how to trade. So do the homework, take all your levels from the monthly, weekly, transpose them to the daily, and then take a look and observe what has happened in the last month on the 4-hour charts. That's the homework, okay? So what I'm going to be seeing is 5 charts of a 4-hour time frame with monthly, weekly, daily levels and your aha moments that you've discovered by looking at what's happened and what we said was going to happen in January with all these respective markets. Tell me what you see in that 4-hour chart, because you're going to see how quickly and easily swing trades are going to jump off the chart at you. So have a good day. I'll catch up with you tomorrow. We're going to do a live session tomorrow at 8:15, and we're going to watch the result of the non-farm payroll. I'm just going to watch it. I'm not trading it. I'm not saying anything. I just want to make some comments about it as we watch it unfold for about 20, 30 minutes, okay? Yeah, I'm not sure why it's saying there's different people as the moderator or host. I don't know why it does that. I think some of you probably mess around and ask to be the presenter, because I had to kick one guy's request to become the presenter in the beginning of the session. But Yeah, try not to mess around with all that stuff because you might end up getting my credit card and information and, you know, find out what my insurance policy numbers are for my cars and all that business, and I don't want you to. I'm just kidding. I'll catch up with you guys later on tomorrow.